Hey guys, welcome to another video of Growing with Kevin. Today, we're going to talk about a very difficult topic, taxes. So I'm currently sitting here on a couch. I would definitely recommend you go ahead and get cozy as well. We're going to break down a topic not a whole lot of people like talking about or even know much about. So let's go ahead and dive right into the topic of taxes, how you can utilize different vehicles to reduce your taxable income, as well as also understand how you're going to get taxed throughout the journey of making more money throughout your career. So either way, let's dive in. Hey guys, welcome to another video of Growing with Kevin. Today, we're going to talk about a very difficult topic, and that is taxes. We're going to go over today how the tax system works currently here in the US. We're going to go over some vehicles to reduce your taxable income, and one key acronym that's going to be very important for taxes for this video, but primarily for the retirement video as we dive into that at a later date. So please grab a nice cup of Joe or whatever your choice of beverage, get comfy on your couch or laying in bed watching this on your telephone. We're going to dive right into the world of taxes. Come along. All right. Hey guys. So I'm assuming now you've had a chance to pause the video, go ahead and grab a nice beverage for yourself, be able to sit down and get comfortable to dive right into this very uneasy topic most people avoid in their lives. So I have a little cheat sheet here. This is also going to be reflected on the screen. So please, we're going to go ahead and get squeezed for a moment and understand these taxes and how they impact your life. Whether you are making $50,000 a year, $100,000, and so on and so forth, right? So on my cheat sheet, I'm just going to reference this. We have currently here in the US a progressive tax system. Now, you're probably wondering to yourself, what does that mean? Progressive tax system is as you make more money, you will get taxed more. Now, that's a little ambiguous, so let me go ahead and explain using these tax bracket cheat sheets. Then I have another pictorial representation which will explain a little bit more detail of how to go ahead and think about taxes. Most people will say, hey, I'm going to go ahead and get a raise. They look at the tax brackets published by the IRS every year. They say, oh, it's going to push me into a new tax bracket. I don't necessarily want that. I've heard it quite a few times in my life. That is not the correct way to go ahead and thinking about it, and I will explain how right now. So, for instance, and this is all going to be in regards to reference of single filers. If you are married and filing jointly, like I am, it is typically double these numbers that I'm referencing. So, for instance, single filers going from $0 of income to $12,400 of income, you are taxed at 10%. If you were married and filing jointly, it's going to be $0 to $24,800 is at 10% federal. And those numbers essentially are doubled all the way down the line, right? So from 0 to 12,400, 10%, $12,401 to $50,400 is 12%. Married filing jointly, $24,801 to $100,800. It's going to be at 12% federal. The single filing jointly at 22% tax bracket is at $50,401 to $105,700. Married filing jointly, $100,801 to $211,400. And so on and so forth, right? So the reason why those brackets are laid out is more so for this representation. This is currently going to be on your screen to talk to it a little bit better. So this is assuming a $60,000 income as a single filer. So if it's just you, you're not married, you don't have any dependents, things of that nature, if you're just filing single, this is going to be something a little bit more clear for you. So as you can see on the screen, you have $0 to $12,400 is on the lower portion. That is taxed at 10%. Okay. Federal. If you're going from $12,400 all the way up to $50,400, you're at 12% federal tax rate. And then from 50,400 all the way up to 60,000, you're at 22% tax bracket. Now, the reason why I use this representation is to understand how your income is taxed. It's not simply you make $60,000 a year in this case, you're getting everything taxed at 22%. That's not the case currently here in the US. So that being said, you have a few different avenues to go ahead and reduce your taxable income. And that is by focusing on an acronym called AGI, the adjusted gross income. Now, you're probably asking yourself, what does that have anything to do with taxes? Your adjusted gross income is going to be the taxable income you make after your appropriate deductions. Those might be a traditional 401k, a pre-tax 401k deduction right out of your paycheck. That very well could be HSA, which is going to be for a health savings account. That is usually going to be for higher deductible plans that your employer will go ahead and offer if that is an option to you, or a few different avenues. Now, the AGI is going to be applicable to what you're going to get taxed on day to day. However, your AGI is going to be something we're going to talk about in a later video when we talk about retirement, specifically the Roth IRA. That number plays a key role on understanding if you're eligible or not to go ahead and enroll in a Roth IRA and if you can contribute each year. So, using those two examples I just went and showed on screen, where we got squeezed by the government to go ahead and understand these tax rolls, there's a few different ways you could go ahead and reduce those, like I mentioned. A traditional 401k, which is going to be pre-tax, is going to have a limit currently in the year of 2026 in August, where we're currently recording this, of $24,500. Now, you're probably wondering, if I'm making $50,000 a year, hypothetically, how the heck am I going to get to that $24,500? I'm sorry. That is solely based on what you believe you need in retirement. And we will touch all on that in a later video when I talk about retirement, how to plan for your number. That number is what you suspect you need yearly, how to calculate that, the withdrawal rates and whatnot. That is not for this video. However, HSA is something that's also done pre-tax. Now, HSA is a fantastic avenue. You can obviously avoid taxes in the beginning. You can use it for appropriate health expenses and get money, I guess, used right to that out of your paycheck. That way you don't need to worry about paying a bill. Or you could even use it as retirement, which is another little hack to go ahead and describe. But AGI is one thing I wanted to clearly represent and detail how important that acronym is for taxable talk, right? So as I mentioned, there's a few different avenues to go ahead and reduce those. So therefore, your taxable income is not necessarily $60,000. You're going to go ahead, let's say you take out the $24,500 right out of here. You're looking at $35,500 as taxable income for the year if you were to go ahead and do that entire retirement account. Now, at that number, your effective federal tax rate is going to be only at 12% as opposed to creeping into that 22% tax bracket category. So that is one avenue you could go ahead and reduce your taxable income by. Now, there is something called the effective tax rate. That is not necessarily just focusing on federal. Federal is the more complicated one to understand your tax brackets, how to go ahead and plan for those for either if you're a W-2 salaried employee or if you happen to be a 1099, which is going to be a contractor. Typically, taxes are not taken out of your paychecks at that moment. Usually, you're going to want to go ahead and bucket said money off to the side in anticipation for a large tax bill at the end of the year for the money that you have not paid the IRS during that 12-month time span or however long you happen to be at that job. So I know typically we're not going and that I guess I will clarify, 1099 roll, if you're not W-2, is not going to take out state money either. So when we go ahead and put all those factors together, the effective tax rate of these 2026 tax brackets, it's going to be your federal rate and your state rate. I'm currently in the state of Michigan. My state rate is 4.25%, and that is on every cent I make, whether it's $1 all the way up to $500,000 and so on and so forth. That number does not change. The federal rate is the only thing that does change. So I wanted to let you know about that because if you happen to be a 1099 employee as a contractor, I would go ahead and recommend, assuming if God forbid you happen to be in some of these higher tax brackets, let's say a single filer making $105,701 to $201,775, just using that as an arbitrary number, that creeps into the 24% tax bracket, right? Then you add on top of that your state rate. That's going to push you darn close, depending on your state. In my case, that'd be 28,000.25 effective tax rate. That number will go ahead and dictate how you go ahead and allocate your money in the future, whether that is via a retirement account, a 401k, as I mentioned, a Roth 401k, which can be post-tax, a Roth IRA, which means post-tax individual retirement account, or that will also dictate, do you go ahead and put money in a brokerage account because you do not happen to qualify for those said accounts, meaning primarily the Roth IRA. And I will get into that at a later video. So I just wanted to simply go over and explain the tax system currently here in the US, 2026 year, for those tax brackets, to understand how the system works, how you could go ahead and lower your taxable income. That way you get more money in your pocket at the end of the day, which is essentially the name of the game. The more money we have, the more freedoms that we have, either to save and focus on the future or to save and focus on the now. If you want a new car that has to come up, if you want to take a vacation with your friends and family, so be it. More money in our pocket equals more opportunities to do things and have fun and enjoy our lives, which is the name of the game. You want to enjoy life while you're on this earth rather than just focusing on the future and paying people and so on and struggling. You don't want to struggle. So that is essentially a summation. Please feel free to like, comment, and subscribe, and drop any questions you may have for me in the comments. If you want to understand a little bit more about taxes with a certain nuance, I'll be more than happy to create that content for you and explain what your question may be in a little bit more of a long form content, go over all the nuances and so on. So please, like I said, like, comment, and subscribe. Come along with me for this journey as we dive right into the world of finances, understand how you take your tax income information and knowledge that I just gave to you, how you then take that and apply that to your retirement planning for the future. That way you don't need to work your entire life. You can enjoy your time with your family. Or if you just want to travel the world as a single person, that's fine too, whatever your heart desires. But this income you get after taxes, you can focus on retirement, your brokerage accounts as well, and then also how to go ahead and budget your money. So those two topics are going to be in additional videos coming soon to this channel. So please, once again, I urge you, like, comment, subscribe, let all your friends know, and share this video with anyone that might have some questions on how taxes work currently here in the US. Thank you so much. Until next time, cheers.